So you have a home and you're thinking about selling it in the near or not so near future. And of course, you want to be sure to properly prep yourself and your home for this future sale. Hi, my name is Len Nevin with Loyalty Home Group at eXp Realty. And since 2003, I've been working with homeowners just like you that have gone through this exact same scenario. A little prep work up front goes a long way. So today I want to talk about the tax implications of selling a property, including capital gains. Selling your home is a significant financial transaction that can have various tax implications. One of the most critical tax considerations is the capital gains tax. In this video, we'll discuss the tax implications of selling your home with a focus on capital gains tax and providing you with insights on how to navigate this aspect of the sale. So what is capital gains tax? One of the most common tax implications of selling a home is the capital gains tax. Capital gains tax applies to the profit you make when you sell a property for more than what you originally paid for it. Here's what you need to know. There is a primary residence exclusion. In the United States, there's a significant benefit for homeowners known as the primary residence exclusion. If you've lived in your home as your primary residence at least 2 of the past 5 years, you may qualify for this exclusion. For single filers, it's up to $250,000 tax-free, while married couples, they get up to $500,000 tax-free. Now, how do we calculate capital gains? To calculate your capital gains, subtract the original purchase price, adjust for improvements, certain closing costs from the sales price. If the result is below the exclusion threshold, you're fine. You don't owe any capital gains tax. Now, moving and relocation. If you're selling your home due to work-related relocation, you may qualify for a moving expense deduction. However, the Tax Cuts and Jobs Act of 2017 eliminated this deduction for most taxpayers, except for active duty military personnel. So keep an eye on that one. Any property improvements and adjusted basis. Improvements made to your property, such as home renovations, can increase your home's adjusted basis, reducing your potential capital gains tax liability. It's essential to keep records of these improvements and expenses and discuss this with your accountant. If you've inherited the property, that's another thing. If you inherited the property, the tax implications upon selling can be different. The property's value is stepped up to its current market value upon inheritance, potentially reducing or eliminating capital gains tax when you sell. Depreciation recapture. If you've used a portion of your home for business purposes or have taken depreciation deductions, you may be subject to a depreciation recapture upon selling. This means you'll need to repay the depreciation deductions you claimed over the years. Now let's look at state and local taxes. That's another feature that people forget about. Keep in mind that in addition to federal capital gains tax, you may also be subject to state and local taxes on the sale of your property. State tax laws can vary widely, so it's crucial to understand specific rules in your area. Some folks, what they like to do is what's called a 1031 exchange. If you plan to reinvest the proceeds from the sale into another investment property, you may want to consider a 1031 exchange. This allows you to defer capital gains tax by reinvesting the funds into a like-kind property. Big with investors. Obviously, consult a tax professional. Due to the complexity of tax laws and the unique circumstances of each sale, it's advisable to consult a tax professional or an accountant. They can help you understand the specific tax implications of your home sale and explore potential strategies for minimizing your tax liability. Just going with like a TurboTax is not going to cut it, in my personal opinion. All right, let's wrap this up. Understanding the tax implications of selling your home, especially capital gains tax, is vital for a successful and financially sound transaction. By taking advantage of the primary residence exclusion, documenting property improvements, and consulting with a tax professional, you can navigate the tax aspects of your sale while maximizing your financial benefits. If you have any questions on this subject, please feel free to reach out. My contact information is in the description below. Once again, thank you again for watching. We'll catch you on the next one.